Hey traders, it's Arrow Algo here coming at you live. We are live streaming today and we're going to be building a strategy on Arrow Algo. So we're going to be doing it live, we're going to be able to backtest it, see some results. So let's make a start. The first thing that I like to do before I create a strategy is come up with a bit of an idea, a bit of a concept. So coming in here to TradingView, and what we're looking at here is the 4-hour graph of Solana. I tend to like Solana just because it follows the crypto market generally, but because of the price range, it's around about $100, $150 at the moment. You get these kind of nice big swings, whereas Bitcoin might only be moving 2 or 3% at a time. Solana might move 5, 10%. So you get these kind of bigger swings that you get to play with. I'm looking at a 4-hour chart here, and we've got some candlestick patterns. So a lot of traders will look for different types of candlestick patterns. If people are interested, I can do another video sometime where I talk about what patterns to look out for. But on TradingView here, I've got this nice indicator here set up, which automatically places these candles on here. So we're going to use this as a basis. I quite like the idea of building a strategy that looks for these candles in a 4-hour chart. So we'll see if we can see a bit of a pattern, and what we can see here is generally you get a couple of bullish candles on a 4-hour chart followed by a breakout, and what we also tend to get sometimes is if you get a couple of bearish candles on the 4-hour chart, if we break above, then it tends to maintain that momentum. So I like the idea of building a strategy around that. Let's see what we can do. So if I bring up my Arrow Algo, here are my existing strategies, some of them doing pretty well. And we're going to create a new strategy here. Let's call it the candle breakouts. So this is just the template that you get at the start. We can remove these with our select all button. And let's start from scratch. So we know that we're looking for candlestick patterns. Obviously we're using Arrow Algo. Arrow Algo is a free algorithmic trading software. You can build, backtest and run any automated trading strategy you wish for free. You can link it up to your account. It sends buy-sell signals to your exchange, and at the moment they're currently connected to 4 different exchanges: Binance, Coinbase, Bybit and BingX. So the candlestick pattern, one of the indicators that they have built in is tracks candlestick patterns, so you don't need to look for these manually. It can pick up based on the open, high, low, close prices. And we're looking at a 4-hour chart, aren't we? So let's start off with Binance, but we can do any exchange. And we're going to set this to 4 hours. I can clone that to duplicate it. And we're going to set each of these data watches to the high, low, open and close. So we can have this indicator look for any type of candlestick pattern based on the incoming data. So let's start off with some bullish ones, and then we'll look for some bearish ones as well. Now if I want to replicate this, again we can use our select all multi-selector feature, right click and clone. And this time we're going to look for a hammer or an engulfing, let's say, bullish. And then we'll go again. This time we're going to look for Harami bullish, and we'll finish with a kicker. Okay, so we can already see this is going to end up being quite a big strategy, so let's make some groups so that we can try and keep it nice and neat as we go. So this group is going to be our hammer bull, this is going to be our engulfing bull group, this is going to be our Harami bull group, and you get the idea. So we've got 5 sets of groups looking for the different candlestick patterns on the bull side, and then we're going to replicate these for the bear. Looking for a bearish kicker there. We're looking for a Harami bear there. Hello, open, close. And engulfing bear there. And again, putting groups on these. Okay, so Now that we've got each of these, why don't we stick one more in here actually. Down the bottom, because we've stuck in hammer, engulfing harami and kicking it. Let's also stick in a shooting star as well, which is another bearish indicator. So same again, we're going to have the data watchers on the 4-hour chart, look at the high, low, the open, and the closing price of these 4-hour candles. So these indicator blocks are being fed by these data watcher blocks, and these are going to look for candlestick patterns based on the high, low, open and close prices that are being fed in each 4-hour candle that comes in. These numbers will be updated as part of our algorithm. So now we need to make some rules around what happens when we see these. So if we come back to our trading view, we said that if we see any of these, let's say if we see 2 of these in the last 5 or 6 candles, then we want to open a buy limit or a sell limit. So if we're checking the last 6 candles, then what we will want to do is create some lag blocks. So the lag will look at the previous candles. So if I set a lag 1, it's going to look at the last candle. A lag 2 is going to look at the candle before that. And a lag 3 will look at the candle before that. And so on. Let's go back 5. So we're going to check if any of the last 5 4-hour candles was one of these patterns. And again, we're going to clone these for each one. And we're going to feed out the result. Anybody with any questions or comments as we go, feel free to stick them in the chat. We'll answer a few of them as we go. last 5 4-hour candles for the hammer bull, last 5 4-hour candles for an engulfing bullish, keep saving as we go. Okay, so next we need to check whether any of these are triggered or not. So as we said, we want to check whether any of the last 5 candles are any of these. So if they are, then we'll trigger an action. So we can detect whether these are triggered or not with a condition block. And this condition block is going to be an OR block. So if any of these 4 conditions are met, any of these 5 light blocks shown to be one of these candles, then this will trigger this OR block. I'm going to feed the inputs in. We will cut down a shortened version of this live stream for those that don't want to watch the full action. Maybe put some time lapses on it. Okay, that's all our bears. 2 more sets of buys. Okay, so of any of the last 5 candles, so let's make a new group up here to specify what we want to happen. So we're going to create another condition block, and I think we're going to make this another raw block. And we're looking for 2 candles, so we're going to have 2 OR blocks, I think. So the easiest way I think to look at this would be if any of the last 5 and one of the current ones. So that would mean we've got 2 bulls in the 4-hour candles out of the last 5 so we've got 4 bull candle formations. So we're going to look for whether the current one is, or whether any of the last 5 have been a hammer bull. Whether the current candle is an engulfing, or whether any of the last 5 have been engulfing. And then the same for a harami. And one more for a kicker. And let's give this group a name. So this group is telling us whether there's a new bull candle in the current and the last 5 candles. And if there is, because these are all blocks, then these should both be triggered. So we can set another condition block to say is number 1 and number 2 correct at the same time. So if we've got 2 bullish candles, then we're likely going to see an uptick. So we want to set a buy order. And why don't we set the buy order at the lowest closing price of the last 6. So we can create an action block for a buy block. And remember, we're looking at a Binance exchange as our exchange for this particular one, as opposed to any of the others that are available. You can choose your preferred exchange. And remember, we're looking at the Solana Tether pair. And we want to put in a limit order. And I'm going to set this to a percentage of the account. Now, I'm not a financial advisor, this isn't financial advice, but I tend to be fairly aggressive with my algos. I'll create different sub-accounts. I won't put all of my money into one sub-account, but I will trade aggressively on these. That's just my style. It may not be suitable for you. I know a lot of people only like to trade smaller amounts, maybe 10% or 5% at a time. But for the argument's sake, I'm just going to set this to 100. So if I've got $100 in my account, it will buy 100. There's no minimum amount for this. And if these are both triggered, then we will trigger the buy order. So for the price, we've set this as a limit order. So let's set another rule to set that buy limit price. And we're going to be looking at the 4-hour closing price again. And this time we're going to look for a minimum block. So this is going to look for the minimum number in a set number of periods. So again, we're looking for the last 6 blocks. And we're going to look for the minimum closing price over the last 6 blocks. And we're going to save that minimum price as a variable. And that price is going to be our buy price. So let's repeat this on the bull side, on the bear side. So if we see two bearish signals and then the price breaks above, then it's likely to continue up here. So if we see two bearish signals, it also could be a sign that the price is about to take a dip down. So let's set a limit order for a buy here, but we'll set it at the highest level because we want to catch that breakout above. So again, let's make some clones of these OR blocks and of the AND block. And set a sell block. Again, I'm selling 100% of the value of the account. Sorry, another buy block, not another sell block. So we're going to set a sell buy block in here. Again, it's going to be a limit order. And let's name this one the bear buy. We didn't actually change these candlesticks. Hammer engulfing harami kicker. Just double checking those are all bears and bulls correctly. So we're going to call this buy block the bear buy, and we're going to call this buy block the bull buy, because these were triggered by bull candles and these were triggered by bear candles, and that means that when we back test it, we'll see the label of which buy block triggered the order. So again, we're going to feed these OR blocks. Now we've got 5 bear candlesticks, candle patterns that we're looking for. So let's change these to 5 inputs. And again, we're looking for the current candle or any one of the last 5 in each case. Let's create a group for this group of blocks. And similarly, we're going to call this any. We lost that. We're going to call this any bear candle in the current and last 6. And if it is, we're going to create another limit order. And this time we want to set the limit slightly high. We want to set it at probably the highest closing price because we want to make sure that we're breaking out above. So again, we're going to look for 4-hour closing prices, but we're going to look for the high price actually. We're going to look for the 4-hour high price. We're going to look for the maximum value in the last 6 candles, and we're going to set that save that value as a variable, and we'll feed in that as our buy price. Okay, so hopefully we've got two good sets of buy orders there. When we backtest it, we'll find out. And then lastly, we're going to decide when to sell. So I get rid of these. So we've seen with this strategy, generally we're looking for a break up to the upside. So we probably want to catch it when it's falling back down below again. So what I'm going to do is look for a rule that detects higher highs and then a lower high. So hopefully we can catch the top of that upswing. So for our sell conditions, again, we're only on a 4 hour. If we wanted to try something a bit more complicated, we could look at something to do with 15 hours, 15-minute charts or something slightly shorter. But for the sake of this, let's start off with a 4 hour, and we can optimize as we go. So again, I'm going to create some condition blocks, and I'm going to use the lag function. So this data watcher will feed out the closing price for the current candle, and by feeding the lag blocks we can look at the last candle. A lag 2 would be the one before that, and a lag 3 would be the one before that. So we're looking for the current candle to now be lower than the one before. However, the last candle should be higher than the one before, which should in turn be higher than the one before that. Which means that we've seen two higher highs and then a lower high. So again, looking at this chart, we'd see these higher high candles followed by the lower high. And again here, higher high followed by a lower high. And let's see how we get on with that. We're going to change this to an AND function with 3 inputs and have an input when each of these are true. And if they are, we'll create a cell. At market. And we're going to name this group higher high to lower high sell. Okay, there we have the first version. Now, I'm not expecting this to be successful straight away, but what this will do, if we click on the paper trader and new backtest, we can call this 4-hour candle breakouts. And let's have a look year to date. Now this is giving me a Bitcoin in there as well. Usually you just set your starting balances, but we've got a Bitcoin in here, which means that we've probably left a Bitcoin block in the scenario itself. And it's our sell block, so we didn't change that. to Solana. Here we go. Just double check the rest of these. Looking good. We'll save that. And if we backtest that now, yeah, we've just got Solana and Tether. So again, we're looking for 4-hour candle breakouts. And we're just going to have a look since the start of the year. If I want to save the logs, this will help me optimize later by using the diagnostic tools within the backtest. So we'll start with that and we'll just have a quick look at the results. If we need to dig deeper into each of the candles, then we can save the logs and use the diagnostic tool later. So while that's running, we can have another look through and see if there's anything more that gives us inspiration. And if anybody has any questions along the way, remember to post them in the chat. And if anybody has any other ideas for strategies that you'd like to see, then we can create them on another live stream. And that's already finished. So this only returned one trade during the period. We had a sell and we didn't trigger any buys. So let's see if we can analyze that and find out why. And it may be because we've fed out the result, the true instead of result for a couple of these candles. Because we're not checking whether it's true or false, we're checking the output. So let's see if that makes a difference. If we want to repeat the same test, we can just click on repeat. And while that's running, we can double check that we've got all of our inputs and outputs right. For each of these blocks. High, low, open, close. We're feeding the lag blocks. High, low, open, close. Okay. So we didn't change the currency pair that we were watching in any of our data watches. So we're looking for the wrong market. So it's a good point to note, though, that we can look at different currencies within the same strategy if we wanted to compare the price of Bitcoin or Solana. Or I know people like to look at Bitcoin dominance as an indicator. You can compare different coins or different exchanges within the same strategies. If you want to build something around an arbitrage strategy, that's possible as well. And we can delete these previous tests because we know that they were no good. And one thing that strikes me is that you will see these candle formations in both bullish and bearish markets. So it may be that the first thing that we need to do is add in a new rule to make sure that we've got the right market conditions when these trigger. So we'll probably find this isn't particularly successful, this first version. So we made 53% and we were 1% ahead of the market. So it's not a bad start. Our winning probability was 46%. That means more than 50% of our trades were losing trades. So here you can see in these down markets you get some losing trades in here. And they're generally better in the up markets. So the first thing that we might want to do is add in another rule into our buy conditions to make sure that we're only buying in the up markets. So we can stick in a moving average, perhaps. Any trend indicator really, either a whole moving average, simple moving average, generally something longer term. So here's 200-day whole moving average, and we know that if the price is above the long-term whole moving average, then generally we're in an uptrend, and if it's below, we're generally in a downtrend. See these nice big sells in here for an 8% gain and a 9% gain. They both occurred when the price was above the long-term HMA. Another one that we could look at potentially is a moving average crossover or a moving average convergence divergence. So again here generally we see when the MACD is above the signal line, we can see some nice results there. We've got a big loss there, so we bought right at the top of the market. So we'll see what we can do to get rid of those types of results as well. So let's start with that. We're going to come back in and edit, and we're going to go to our buy signals, and we're going to add in one more condition to this final AND block. and we were looking at a 1 hour candle on there as well, so let's turn that into a rule. We're looking for the Binance 1 hour closing price on the data watcher. We're looking for a whole moving average, and we had it set to 200 periods. And we want a condition to check that the price is above. Now I could feed the same result into this condition as block as well, all the way across, but it's already quite a messy scenario, so let's just duplicate it, make it a bit cleaner. So again, price is above the whole moving average over 200 periods on an hourly chart. And this is very much the process. It's an iterative process, I find. Algo trading, you come up with a theory, create a scenario, you test it, analyze the results, come up with another theory, input or change some rules, test it again, and you keep going until you find you've made a profitable strategy. So the last back test took 35 seconds to run. We've added in one rule that may make it slightly more complicated, but shouldn't be much longer than that. So you can see here on this chart as well. So this is what we're aiming for. Two candles within 6 and the price above the HMA. And we're already done that, and we can see that that is now 49% and a winning probability of 41%. So interestingly, that's made it worse. And let's have a look through some of these results and see if we can work out why. We were trading above the HMA. So we can see here there are a few examples where even in a bull trend, when the price gets above the HMA, it then falls down shortly after. So that's a good learning. We can try something else. Like rather than the HMA, perhaps we can try a simple moving average. And again, we want this to be long dated. So we've now cut out a couple of these signals that caused losses. If we trade below this SMA line, And we still keep a couple of these nice gains in the up market. So let's try that. We're going to swap out that HMA for a simple moving average. And again, we're looking for long dated. If you're a scientist, then you'll like this process. It's theorize, test and validate. Hypothesize, test and validate. I'm looking at price over 200 SMA. This one took just 49 seconds, that test. And there are still some nice gainers in here, it's not all bad. So we can reduce some of this noise as well, maybe take out some of the bad signals, then we could turn this into a nice strategy. I like the way in a couple of times here we managed to catch the market right at the top, here and here, and we managed to pick up some of the corrections on the way back down. So we're now back up to winning ways here. We've changed this to 52% and 1% on Solana. So 52% against cash, 1% against just buying and holding Solana. We've still got a low winning probability though, only 43%. It'd be nice if we could get that up a bit higher. And we've got a couple of big losses in here as well. So 10% on the 6th of July, 18% on the 20th of March. So let's see what we can do to filter out some of these big losers. Work out first of all why they're losing, and then come up with a theory for some new rules. So for this 18% here, you can see that we've bought right to the top and then followed it all the way back down. So that's going to be a danger with this because we're looking for breakouts. So for this, either we can look at a stop loss, or we can come up with a reason to try and prevent that buy signal from occurring. Let's experiment with a stop loss first of all. what we don't want to do is have a stop loss that's going to cash out too early, because we might lose. For example, here we might have had a stop loss kick in there and we would have lost that nice gain. So we want to build a smart stop loss. One thing that I also like to check is, what's the volume telling us? So one thing that strikes me here is that this buy signal saw a dip in volume. So that's a handy piece of information that we can use. So generally when there's more volume flowing into the asset, we know that there's momentum. Or the other thing to use might be a momentum indicator like an RSI. And we can see on a 15-minute chart at least, a couple of these buy signals feature when the RSI is very high. Let's go back to the 18%. So that 18% occurred on the 20th of March. Let's have a look at what the RSI was telling us then. On the 15-minute time frame, RSI was 59 and the OBV was 5.7 million, but generally on the rise. We switch that over to an hourly time frame perhaps. We can see the hourly RSI was very high there as well. That was at 65. So we have a couple of theories there. We can go and test them out and see which ones make a difference. So again, we're looking at these buy conditions. And this time we want to make a rule for the 1 hour RSI. And create a condition to check that this is less than. We're going to use a fixed number block. We'll set this fixed number to 65. So we've now got 4 rules, 4 conditions to be met for our buy block. And let's repeat that same time frame. Call that 1 hour RSI. So once we have a version of the strategy that I'm ready to see in different market conditions, then I have a range of different types of backtests that I'll run. I want to see it in all types of conditions. I want to see it in bull conditions, bearish conditions, sideways conditions, and generally over different time frames as well. So we'll look at how it performs over a 3-month period, 6-month period, 12-month period in a bull, bear, and sideways conditions. So we'll get a good holistic overview of how our strategy performs in different types of markets. So interestingly, the first thing I noticed there is that we've managed to cut down the number of trades as we've gone as well. So we've got a higher winning probability here, and we've got less trades. So what we've done is cut out some of the more unsuccessful trades, and we've got a much higher profit loss ratio. Let's open it up. The overall strategy is at a loss, but some of these key metrics are quite nice. Let's overlay our moving average. And our RSI that we've already put in. And again, this type of activity is what we like to see, catching these upswings. But again, we're still catching some buy signals in downtrending periods after the top. Like in here. So now what I've done here is I've changed the graph to 15-minute periods to see if there's something on a shorter time frame that we could have seen that would have put us off there. So 25th of May we lost 11%, and 5th of March we lost 11%. So let's have a look and see those particular dates. The 21st of May was when we bought in there. We can see a little bit of divergence on the volume. Let's have a look at March. Here it is. So the volume was on the way up there as well. But what we do also see here is a huge RSI. So either we can look at a shorter RSI rule, or what would have been nicer is if we'd seen perhaps a take profit further up here. Although this is quite a long time frame strategy, looking at 4 hours mostly, so I don't want to get too caught up with sell signals for short term, because what we might find is that we have a lot more sales and we trigger a lot more noise. So let's have a play with that RSI again. And you can see how these strategies start simply and they grow and grow. But you can see how easy it could be to overfit to certain market conditions as well. So we need to be careful that we're not creating too many rules that are too specific to this time period. But I think this should be okay. While that's testing, let's have a look at the volume on the longer time frames. I'm a big fan of tracking volume. It gives you a real idea of where the institutional money might be going. Volume divergence is a huge benefit to track. So something like here, I mean, we see a big increase in price all the way along here. However, the volume isn't quite rising at the same level as well as here as well. And one rule that I like to put in occasionally is checking whether volume is over its moving average or not. Or have a look at the moving average crossover of volumes. Thanks, TXM. Just to answer your question, I generally prefer a winning probability of anything over 60%, 60-70%, but again, it depends on the strategy. So a couple of the strategies that we've got, for example, here, these strategies have a very low win rate, but they look for big increases in price. So these are real momentum catches. So they generally will have a lot of stop losses along the way, but we know that they're going to catch the big upswings. So it depends on the strategy that you're going for, really, as to what winning probability you might look for. And again, here we've not been too successful with that RSI. So we're back to the drawing board. And let's go back to our last result. Let's have a play with the stop loss and see what it does. So the very simplest form of stop losses would be to have a look at a short time frame and have a look at what we call the last profit block. So for example, if we're looking at the end of each 15-minute candle, and is the price moved to a position where the profit since the last signal has fallen below a fixed amount. For example, if we go more than 5%, then we generate a sell. Now this is a very simple stop loss. I like to try and make them a bit smarter if I can, but for the sake of the example, I'll run a test with this so you can see the difference. You can see as we add in more rules, the time taken for each backtest will increase slightly. And depending on the type of rules as well. So we're looking at 15-minute candles here, whereas before it was only 4-hour candles. So we've immediately got a lot more candles that we're processing along with that testing data. So the 15-minute RSI didn't do us much good, so we can actually get rid of these. And that should speed up the backtest. Let's see if that one actually finishes before. Now let's go back to the 1 hour chart, and what I'm looking for here is any way that we can make these sell signals a bit cleverer. So at the minute we're just looking for higher highs on the 4 hour chart followed by a lower high, but there may be a much better way of catching the top of the market. Now here we are. So we can see already with this stop loss we've actually made the results a lot worse, and that's because it's only a very basic stop loss. What we've probably found is that we've cashed in or crystallized a lot of losses. So that's why it's nice to have a smarter stop loss, because if the price dips then you can still ride some of the gains back up again. Up here for example, in the last version of the test you probably see that this price would have dipped and then sold up here, whereas because we've got a very basic stop loss only, and that's kicked in straight away. So one thing that we can do is add in some more rules into this sell. So as I said, one thing might be that we're looking for a fall in volume. Another thing might be to look for generally trending downward markets. So is the volume lower than its moving average? And we talked about MACD before. Is the MACD giving us a bearish signal by the MACD being below its signal line? So there's only a couple of rules in here, but what we'll hopefully find is that we'll prove the point that the smarter we make our stop losses, hopefully the less impact it should have. So let's bring it back to our 50% win rate. Now, one thing that we can try and do is try and filter out some of this noise. When the market's trading sideways, we're probably not going to be making too many gains there, even though the price might be above its long-term SMA. So if you remember, this is one of the first rules that we put in. So even though it's trending above its long-term SMA, it's generally a pretty sideways market. And if we have lots of trades in and around this kind of same range, then what we're probably going to find is that we're just going to have our money eaten away by trading fees. Generally, we want these sale orders to be take profits as opposed to stop losses. We've got a stop loss in there now. We've got a smart stop loss set, so we can try and make sure that we're not triggering this sell order when we're in a loss or in a range too close to the market. So what I'm going to do here now is add another rule to that effect. So we'll add another condition here that says, again using our lost profit block, and our fixed number block. And we're going to check that the profit is more than 1.5%. Now we've taken away the stop loss in this version. I've actually used tweaking a previous version, so we'll add the stop loss back in as well. We're actually going to call this a take profit sell. And we'll call this one the sell stop. So let's look for a few different conditions in here. Let's say an hourly RSI. That's not actually. Let's have a look at a super trend. If the super trend is telling us sell on the hourly chart. As I say, it's worth playing around with different indicators, different strategies. I mean, we want to try and make these stop losses as smart as possible. We don't just want to, as you can see here from this previous test, we don't just want to sell too often. I mean, this one we took the win rate down to 22% because we just had too many sell orders. These stop losses were kicking in far too quickly. So again, it's going to be about reading the chart, trying to come up with ideas as to when to trigger these stop losses and how can we make them as smart as possible. So super trend, the super trend indicator, for people that don't know, it's a trend based indicator that plots a line above or below. Generally on the downturns it's red, and on the upturns it's green. So if we've got an hourly super trend that's red, then we know that we're in a down market. And the super trend needs a high-low close and a source, which I generally use the closing, but again, play around, see what works. So if we're trending sell on the hourly, we've got falling volume, and we're in a more than 5% stop. And again, we've made sure that our take profit here is above 1.5%. So hopefully this should cut out some of our noise and some of those sideways trading conditions. That last back test we got down to 1 minute 45 seconds. And one thing that we do find, because of the nature of the way that we've set this sell, it looks for rising 4-hour candles, higher highs, and then a lower high. So what we might find for a lot of these sales is that we're catching a dip rather than selling right at the top of the market. So one thing that we could do as well is make our sell order a bit smarter. One way that I like to do that is looking at the linear regression, i.e. the slope, and looking at the rate of change of that. So let's play around with that in a minute as well. So we're back up to 46% now, and we are 33% gain. And we've not actually had many sell orders, any buy orders after the 18th of March. So there's something in that we did that it didn't like. Very good on the way up at the start. Interesting. So my next thought process would be to analyze why that hasn't sold as much, why that hasn't bought back in after in this initial point. But you can see here for the start of these are some nice results here. So next thing that I'm going to do is look at how I can make that sell smarter, and look at why we haven't bought in. But conscious of time, we've been live streaming for an hour and a half now. I'm going to leave it there. Thanks to those who watched. Thanks for those who commented in the comments. Yeah, we'll do another session tomorrow. I think I'm going to start doing these more regularly. It'd be good to just to share the thought processes, really. I know that some people struggle to use the software a little bit, so yeah, we can talk through kind of my thought process as I go through it, as I build and design these strategies, and yeah, we'll make a bit of a library of content for you guys. Happy trading, and yeah, see you all soon.